All right, let's do this thing. Best stocks to own in September of 2022. I don't know. I know that's kind of a cop out, but really, I don't know. The stock market is really, really volatile right now. I think that you can do all right if you just buy a couple of good companies. I've said this multiple times. My thesis here is buy good companies, buy the equipment, hold on to it. That's it. I think there are some good deals out there in the market these days. I still think Comcast is a screaming deal at the moment. I think that there are some screaming deals. Other places, I'm not really super confident. I'm in a lot of those other ones because I haven't done a lot of research into these companies to understand them. Um, I've heard rumors that Intel was a good buy at this time. Um, I kind of think that AMD and Nvidia has Intel's is kind of eating Intel's lunch. So I'm not super confident about them, but they've got a nice yield. They're in terms of their dividend. Their stock is beaten down pretty hard, and I think kind of deservedly. I do think that they do have a pretty significant market share still, um, but it's kind of on the decline. And it may be one of those turnaround stories, right? They might be able to turn it around and really get in there and compete again, but maybe not. I worry about Intel, to be honest with you. I here in that space, hearing a 4% yield or so, that worries me because they really should be reinvesting into their chips instead of paying out to dividends to shareholders. But who am I to say I don't own them? I haven't really looked into them. It is just what it is, right? Um, but here's the thing that I want to say: the stock market is set to decline, and it's going to keep going down. Frankly, it just has to. Um, Technically, it doesn't have to, right? But I think that the fundamentals aren't there to support the levels that we've got. And because we can't support those levels, there's no foundation for the prices that we're seeing in the market. I think we're going to see a decline. And so, honestly, the best thing that you can do here in September is not to dive into individual companies. It's not to do anything. As a matter of fact, in some respects, what you should do is just sit back and relax and watch the show. Um, the only exception to that would be to dollar cost average, continue to dollar cost average into an index fund, right? Because the best time to buy is now, regardless of the price. That seems counterintuitive coming from a value investing mindset that I have, but study after study has shown that if you buy index funds consistently, as soon as you have the money, time in the market beats timing the market, right? So take that for what it's worth, because honestly, it takes a lot of the stress out of investing. It really does. Um, if you have some strategic bets that you want to make along the way, great. Like my Comcast bet, right? I think that they're really, really undervalued. I'm putting a value of somewhere between $40 and $43 a share for Comcast. It's trading around 35. That seems like and remember, I'm using a 15% discount rate, that a 15% required rate of return to get to my $40 to $43 a share valuation for Comcast. So 36, 35, that is a screaming deal. And I'm buying, right? It looks really, really, really attractive to me. And so I'm making a strategic decision to purchase at this moment and continue to average down my cost basis in this position as we hit new 52-week lows. So I think that's probably the thing that you should be looking at. Look at the companies that you own, do valuations on them, and as the market's declining, pick them up. Pick up more shares. If you already like the company enough to own it, and the price has gone down, and you think that it's a great piece of property to own it. Buy more. That's all that you need to do. And that's really the message for September this year, is buy cheaply, right? Buy it when it's cheap. Buy heavily when it's cheap. And do good valuation work. And then continue to dollar cost average. We're at the top of the market right now, and we're starting to, and this entire year we've been riding the roller coaster downhill. And that's fine. Just keep going. Go for the ride. Keep picking up more and more shares as we hit the bottom. We'll eventually hit the bottom. I think that we've got a long way to go. We're probably about twice as high as we should be. We should see a 50% decline. I'm not even joking here. I really think that we'll see a 50% decline. But that actually makes me more bullish than bearish, because my personal strategy of, hey, just keep buying, right? Dollar cost average, buy the same amount in terms of dollars every single month, and you'll end up buying more when it's cheaper. And so, like, I want it to go down. I want to see the market go down 50%. That sounds terrible, and if you're close to retirement, you're probably hating me for saying that I want a 50% decline in the market. But I've got 30 years in the market, 30 years plus, minimum. Actually, I consider my investing time horizon to be closer to 60 years, because I'm expecting to live for a long time after retirement, right? After I hit a retirement age. So my investing time horizon is 50, 60 years is really what I'm shooting for. So a 50% decline today sounds amazing, given that I have a 50-year runway in front of me. I would be thrilled with a 50% decline. And that's the way I want you to think about it. And as we go into September, the stocks that you should be buying are the ones that you are the most impressed with in terms of its valuation. Its ability to grow, great. Let me give you another example from Comcast. They just recently entered the European market with their acquisition of Sky. They're mostly heavily concentrated in Italy, and they've got the entire continent to run, right? There's amazing growth potential for Comcast. So I'm not worried. I think that they can continue to grow. And that's really the thing that I want to say is, if you see a company that you think can grow, that's got some legs under it, and it seems to be undervalued, buy, right? The market is presenting opportunities constantly. Not every stock is a good buy, right? I would not buy Microsoft in this market. I would love to own Microsoft. I would not buy Costco. I would love to own Costco. I think they have a fantastic business model, but I think it's overpriced at the moment. And am I going to be sitting around forever waiting for the price to come down to somewhere that I want to buy it? Maybe, right? But in September this year, just sit back, survey the market, see if there's anything worth buying in your opinion, and buy that. That's it. That's the stock that you should be buying. Same as any other time. There are thousands of securities that you could buy in the stock market. And the thing that you want to buy is the thing that makes the most sense, because out of those 1,000 securities, there is always going to be something to buy. Always. Let me emphasize that again. Always. There will be something to buy, because there's always going to be something that's undervalued. You can find it. You can find it. If you turn over 10, 20 rocks, eventually something's going to wriggle out from underneath one of them. So just keep looking. The thing to buy in September is business. Buy good businesses. That's it. That's it. And if that means that the only thing that you're going to do is dollar cost average into the market, dollar cost average into the market. That's it. So that's what you should be buying this September, is index funds and anything else that you think might actually make a good purchase that makes sense to you. That's it, right? So enjoy, have fun. September, as Mark Twain is known to say, is a terrible month to buy stocks, as is January, February, March, April, May, June, July, August, October, November, and December. It's particularly dangerous in any of those 12 months. So just be careful out there, guys, because the stock market, it's volatile. So have fun, and until next time, stay rational, my friends.